We detected unusual options activity on Pacific Biosciences of California, ticker symbol PACB, today, January 5th. So we wanted our subscribers to know about it, especially our members who get early access to this video. Pacific Biosciences is a life science technology company. They work with DNA molecules. They've been around since the year 2000. So, what could happen to the stock? As usual, let's take a look at the unusual option activity. About an hour ago at 10:02 a.m., 10,000 contracts expiring September 20, 2024, 12 strike calls and the 17 strike calls. For these 17 strike calls, it appears they were buying since this price was being traded at the ask price and it's colored green. However, based on our analysis of other variables, we believe this was a sell to open and that the 12 strike was the buy at 155 and they sold for 60. Okay, so 155, they sold for 60. Each trade cost $95, and since they did 10,000 contracts, this trade was $950,000, a little below the $1 million trade value threshold that we use to categorize this as a higher probability of profit trade. Okay, so keep that in mind because this is not a very high probability of profit, okay, in comparison to our member-only trades. Okay, this is much lower, and if you are interested in our higher probability trades that we share with our members only, then we'll put a link here where you can learn how you can join our membership to gain access to those trade ideas based on this type of analyses. Okay. 12 strike calls, 17 strike calls, September 20. You can see here, volume 10,000, both strikes, both greater than the open interest, so we know these are opening trades. Because this is a lower probability of profit trade, we are in the same position so that we do not have to put a lot of time and effort into developing our own option strategies, which we do for our higher probability of trades that we share with our members only. This trader bought the 12 strike calls and sold the 17 strike calls. And as we explained, they bought it for $95 each. And so you can see here on the profit loss diagram that this is a vertical call spread that is bullish going long. You can see the positive delta 24. Okay, and since this is further out in date in September, the theta risk is not as high. You can see it's nearly zero, but slight negative. And so you can see here as the price goes up, this trade becomes more profitable. If it goes down, it is a loss. You potentially could lose 100% on the trade. Has to break this break even, which is around $12, well, 95 cents because you paid, they paid 95 cents. So the strike price of 12 plus 95 is the break even at expiration. Okay. If it does rally, you can see that they could potentially make $405. Right. So that is a risk to reward ratio of about 1 to 4. So very good risk to reward ratio here. Okay. For it to rally to about that $13 mark, you can see here, that's about 38%, right? So comment below, do you think Pacific Biosciences will rally, be up about 38% by September? Based on the analysis of these unusual options, that is what it is telling us. Okay. If you are interested in our higher probability trades in comparison to this trade, then make sure to go to our website. We'll put a link at the top right corner here. And as usual, please smash the like button, subscribe if you haven't, and as usual, have a great day and good luck.